If you guys are looking at my screen right now, this was the hypothetical trade I took today. Was a break even. Did not take this trade, but watched it, or took it on paper essentially. If I were to have taken another trade, maybe would have taken this. No, that would have ran all the way. But honestly, today was just not the best day at all. But today's actually a perfect example, though, of what we're going over. Today we are going over how to find your bias, and I want to talk about something before we get into this. But essentially, when you're coming into the market, yes, you should have a general bias. So let me kind of talk about what I was looking for and clear these charts up, right? When we came into today's market, it's not necessarily a bias that I'm looking at. Like, obviously, when I'm coming into the market, I understand, okay, I'd probably want the market to go here, like up or down, right? But rather, you should come into the market and think about it as what are the possibilities that we are going to go up or down, okay? So today was a perfect example of what I'm talking about. Today we came in, and I'll get into the session soon here, but today we came into the market and it was clear to me that we were kind of all over the place. Let me go ahead and go all the way back to 9:30. I'll go to 10. Okay, so at 10 o'clock, I see, and this is what I was waiting for. From 9:30 to 10, we were playing around in this gap here. So we are in a higher time frame fair value gap, which we're sitting in. So on the 1 hour, we inverse it. On the 4 hour, we also inverse this 4 hour gap. And then on the daily time frame, what do? We're sitting in a fair value gap as we speak. So with that being said, my thinking of today was, okay, most likely since we closed at 10, which is all the way back here, again, it's not a bias, it's not I'm only looking for one direction, but since the probabilities of us, since we inverse the 1 hour, inverse the 4 hour, and we're sitting in a daily range, what I'm assuming is, yes, we will probably go lower. I'm assuming we might take out some sort of target here, maybe take out this liquidity here. That's just what I'm assuming. But then again, you shouldn't marry a bias. You should be reactionary to the market. You should react how the market reacts and go based on what the market is telling you. So off rip, right, as you guys know, I want to see the market, if I'm looking to short, I want to see then the 10 a.m. PO3 take place, right? So I want to see the market actually go higher before pushing lower. So that's what I'm looking for, okay? So I see the market starts pushing higher, and at what point, I think there was a 15-minute gap. Yeah, so we have these 15-minute gaps here. And do you guys remember what I talked about, right? If we inverse both of these gaps, then most likely we're going higher. But if we only inverse one, we could potentially range around, or we could still go higher, or we could go lower, reject out the second one. So immediately I see that we inverse the 15-minute. And now I'm like, okay, shoot. Well, if we inverse the 15-minute, if we then inverse that second 15-minute, then price could play out to the upside. There's equal highs up here. We have Asian session high up here, London session high here, and there's a very obvious 1 hour liquidity sweep right here. So yes, coming into this, I was bearish. I was bearish at 9:30 open, or past 10 o'clock open. But with how price is moving, it would not be fair to say at this point that price is bearish. It'd be definitely fair to say that we're most likely going to keep pushing higher, especially after inversing a 15-minute within at least this session. What do we then get? Well, I essentially just waited through the 15-minute and waited for this gap to get inversed. Now again, I did not take this trade, but what happened for the next freaking 20 minutes? No, it was like literally an hour. We just would not inverse this gap. We tried everything and we just ranged around for minutes on minutes on minutes for a very long time, until eventually we actually got the hypothetical trade that I took right here, and then that would have been break even. So when you come into the market, yes, you should have a general understanding of what could take place, right? When I said earlier at 10 o'clock, okay, I understood that we inversed the 4 hour and the 1 hour time frame, but we are still in that 1 day fair value gap. But I'm saying it is still probable that we will go down, but I am not saying that I don't want it to see it go up. Like, yes, I want to see it. If it does go up, yeah, it's good, but then I want to see it react to the downside. But if we go up and we don't react to the downside at all and keep going up, then you need to react to the market. Obviously, there are people who will just take their bias and just not do anything with it. But that's essentially how I go about that, right? Is react to what the market is doing. So essentially, the way I find my bias or go about my trading is pretty simple, actually. Like, it's really nothing too special. I'm going to go back to yesterday for an example. It's very, very simple how I find my bias on the daily basis. So if I come in, again, I get on the charts at 9:30 every single day. If I'm coming in, it's very simple. First step, I go to my sessions indicator. Now, these sessions are different than most people. These sessions are what works for me and what I like to use. I believe these times are the best times, even though they're overlapping. I love the overlap, and I think these are the true session times. But again, there are different times, but it's very simple. Come in, mark out your Asian highs, mark out your London highs. Ooh, sorry, I had to sneeze. Oh, three-peat, holy shit. Okay, mark out your London highs, then do the same thing for the lows. Oh, London lows and Asian highs, or Asian lows, sorry. Boom. Just like that, we have what we like to have marked out. Now from here, it's going to be a little bit difficult because it's not going to show properly, and I'm probably going to get booted out. But from here, I would then go to the 1 hour. Again, this is not going to show properly, and I would kind of just mark out things that are obvious. So in this circumstance, we have an obvious fair value gap here. I would mark this out. I would then maybe just mark out some obvious areas of liquidity, so we kind of just have a broad candle here. So I'd mark out maybe these highs here and these lows out of this candle. Then from here, go to your 4 hour, and again, usually it kind of overlaps, but I would just kind of keep in the back of your mind that we're in a fair value gap as we speak. So keep that in mind, because if we're in a fair value gap, we can definitely just chop around, but it's not guaranteed. So just like that, I have my targets for the day. Now from here, it's essentially, okay, let me find basically some like 15-minute or 5-minute that's going to show me possibly where we could go. Okay, boom. What do we have again? This is another example of that double fair value gap. Okay, so I'm going to mark out both of these. Usually I don't mark these out just because I have, my usual setup where I've got the 5-minute and 15-minute here, but it's still good to mark out if you're kind of newer. So boom, we have everything marked out. We'll check the 5-minute just to see what we have as well. 5-minute, we've got some gaps within here, kind of chopping around, but let's just see what could possibly happen. So from here, it's just simple, right? It is saying, okay, if we inverse both these gaps, I'm assuming we're going to take out Asian high and London high. If we reject hard off of these gaps and continue pushing lower, I'm going to assume we probably take out this low, with then the potential to take out this low and London lows. So let's kind of see how price reacts. And off rip, we immediately just take these highs. So from here, I will say now you're literally just given now another opportunity where it's probabilities. Okay, if we react super strong off these highs, if we immediately push into these highs and then immediately start trickling down, boom, that's where you'll catch your trade. You catch the trade to the downside and catch the reaction off of that move. Or I'm pretty sure today we're gonna react, and I mean you guys will see what happens, right? So I'll walk you through this. So right now, my live time frame bias would be, okay, I want to see if we react super hard off this or if we react super hard off the fair value gap. So let's go ahead and move forward and see what happens. Okay, from here I'm seeing, okay, it's definitely, we're pressuring down. Maybe look for maybe a trade to this, but obviously I wouldn't take that until we get a rejection. But we have that target, and it does look like we're rejecting pretty hard off of price here. Okay, boom. So I wouldn't be able to catch a trade in here, but I see that we swept this. So now that we swept this is a key level. That's 9:30 open. There's a lot of orders that we just took right here. From here, it's kind of a 50-50, right? So if we look on the 5 or the 15-minute, the 15-minute and 5-minute is still forming. We still have about 6 more minutes to see, okay, are we going to inverse these gaps? If we inverse these gaps, then I'm going to assume we're going to keep pushing higher and take out this, or tap into the fair value gap. But if within the next 6 minutes, we continue to push lower and close below these fair value gaps, I'm going to assume we take out this and possibly push even lower. So let's go ahead and see what happens again. Okay. Okay, we have 1 minute to see if it closes above. Boom. Okay, we have closed above the 15-minute fair value gaps. Right here, we have inversed these fair value gaps. This alone will tell me most likely we're going to push into this fair value gap. It's not guaranteed, but there's a high probability that we're going to come tap into this fair value gap and potentially push even higher or take out maybe like these highs or something here. I'm going to go ahead and mark out that. Okay, so now with that being said, my bias is now, rather than 50-50, it is most likely 70% to the upside and 30% to the downside. If we got a real strong move to the downside, that would be the only way that would pull me towards that bias. But for now, this is all I'm seeing, and all I want to see right now is us probably tap into this fair value gap. So here, okay, boom, we pushed pretty hard, but with the hard rejection out of this, probably looks like manipulation. Okay, boom. Okay, we just got a very strong move. So now here it's probably back to 50-50. We got a very strong move to the downside. But again, I'm not going to just enter off of this reaction just because, I mean, we've already swept out this low. We've already swept out that low. And if you entered here, it'd be super premium and you wouldn't really have a break-even point until this target. So it wouldn't really make a lot of sense. So if this runs and takes out these lows, is what it is. I'll then see how we react off of these lows, just like how we did in this situation up here. But in that circumstance, let's just go ahead and see what happens. Okay, we're running as we see, and I would not take this trade. Okay, but now we have tapped into these lows. So from this point on, I would not have taken probably a trade in here, especially on the 30-second, not really any setups. But now we have tapped into these lows. I can say, okay, we might tap into this low still. If we do, I'm still not taking a trade to that. But from this low, I can potentially now catch a move all the way back up to the fair value gap. So from here, it's basically 100%. I just want to look for the highs. I don't really care for the lows. If it takes the lows and keeps running, is what it is. Those are my targets, so I don't really have targets past this. Well, I do have the Asian lows actually, but I would need to see something very convincing to get me to those Asian lows. And right now, yes, this is convincing, but again, we inverse the 15 minutes, and we don't really have a 5-minute gap within here. Okay, well shoot, price just rocketed back up. That's not really a good representation of it. But from here, we don't really have a fair value gap on the 5 minutes to even inverse, so nothing really telling me just yet that we want to basically go all the way to the downside. So from here, as we see, very strong reaction off of price right here. Price immediately rejects off of this, and we push higher. So from here, I believe this is where I took my setup. We have this fair value gap here, boom. So from here, again, if we were to push lower, I would want price to reject out of this fair value gap, and then maybe, yes, I could look for a trade to the downside. But what do we see? We inverse the 1 minute fair value gap. So from here, I'm like, okay, we inverse the 1 minute fair value gap. We could possibly be pushing higher. We could easily be pushing higher. I do like the fact that we didn't tap into the 1 hour fair value gap. I would expect that to get tapped into at some point today. So let's go ahead and see what happens. Okay, we've created a fair value gap. If this fair value gap holds on top of this fair value gap being inversed, okay, what can we assume? It will probably push higher. That's just the basis of how fair value gaps work, right? If we inverse, then most likely I want us to like reject off of this. And if we get a fair value gap within here, within the rejection and push higher, then that's exactly what I'd want to see, and that's a textbook entry. What do we get? Well, you guys are about to see. Okay, we almost inverse this gap. If we reject off this gap and push higher, boom, that's also good. But you guys will see what happens. We tap into this fair value gap. What have we just done? We've created another fair value gap right here. What are we going to see happens? We inverse that gap, and that's exactly where I took my entry yesterday. Boom, I take my entry right there because I am basically just assuming we are going to run all the way up. I didn't even target the fair value gap. I just targeted just that wick right there. And what are you guys going to see happens? Price absolutely smashes that TP. Boom. And now from here, you can now do the same exact thing. Okay, we have tapped into the fair value gap. We haven't taken Asian lows or London lows. I can just say, okay, if we react off of this strongly and we get maybe like a 5-minute inverse within here or something like that, I can look for a trade now. But then obviously you'll see price keeps running. So the way I pair my bias with everything is essentially it's all 50-50, but as soon as we get a 5-minute or 15-minute fair value gap that gets inversed or respected to another direction, that will kind of push you over the edge to then another bias, right? That'll push you to, okay, for example, today we inversed the 15-minute fair value gaps to the upside. That pushed me to essentially wanting to see longs. Yes, you could have caught these shorts, but the probability is not as much in your favor just because The 15-minute and 5-minute is showing we went higher. The 1 minute, yes, is showing we went lower, but I want to go based on what the 5-minute, 15-minute is telling me to do and take my entries on the lower time frame, aligning with the 5-minute, 15-minute time frame. And that's exactly what happened today, or in this day, for example. And that is essentially how I find my bias on the daily basis. Again, it's not a bias, but it's rather figuring out price to adapt to price, right? It's not just being like, oh, I want to see longs today, I will not take anything except for longs, because there's a lot of times, right, where it's manipulation in the market, where you just want to see this happen, and price starts going here, 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 and then boom, we just take out these lows, and maybe we have like, there's another target that maybe you don't have marked out down here, and then as soon as price reacts off these lows, you're like, oh my god, there's a liquidity sweep, oh my god, we inversed, and maybe on the 5-minute time frame, for example, 5-minute time frame is like this, and we just inverse this gap to the downside, making this move, and now price is starting to reject back up with a new 5-minute candle, and you're like, oh my gosh, yeah, we're longing this is coming to this point, this is even coming here, bro, this looks great, we inverse a gap, I'm taking this, but in reality the 5-minute is just retesting the fair value gap just to push even lower as price pushes even lower, and you would not have been able to catch that if it wasn't for, or like you would just be like, oh my god, yeah, it's longs, because you're so biased, right? You need to have an open mindset when it comes to the market. You need to be reactionary. You do not need to just marry one side of the ball, because a lot of times if you do that, and I did this myself early on in my trading, it will just kind of, it'll give you false hope within the market. Like for example here, right, you're like, oh my god, liquidity sweep, inverse fair value gap, oh, this looks beautiful, I'm going to try and like almost bottom tick this and not really have full confirmation, when the 5-minute time frame is literally telling us we're going to the downside, and you just see a 1-minute setup that looks good, but in reality the higher time frame is pushing lower, but you believe just because you have that bias that we want to push higher, but in reality we're just going to keep pushing lower, and you were just manipulation or exit liquidity for a lot of traders, and that's exactly what you don't want to be. That's why I say being reactionary in the market is the best way to go about things, and it's going to save you a lot of times, because it's just going to allow you to look at the market with a very open mindset and kind of just go through the market just being reactionary and not being married to one side of the ball. And that is how Andrew Trades finds his bias. And I don't even like saying the word bias. It's more of finding the way the market might move and reacting to how that might happen. Is basically how I go about it. Do you guys got any questions on that? I'm assuming no questions. All right, well, that'll be it for the bias class. I think on Friday this week we will be back testing together, so you guys will see me essentially use the model. Oh wait, no, that'll be okay. Yeah, so we back test this Friday and next Friday. So we are coming to the end essentially of kind of the whole just essentially like the whole boot camp. I am going to rearrange the boot camp a little bit. Like tomorrow I want to move that to actually next week, and I'm going to put 50% retracements to tomorrow. It'll be 50% retracements, and equal highs will be tomorrow. I'm going to go ahead and fix that now. So essentially, and we're coming to the end, but I hope that helped you guys out a little bit and can kind of help you in your trading. Go ahead and fix this a little bit. But with that being said, I will fix that off stream. Hope you guys enjoyed that one, and I will see you guys tomorrow morning for daily live trading. Deuces, everyone.